Good afternoon. My name is Scott Redler, the Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. It's Thursday. We're almost done with the first week after Labor Day. I wouldn't say there are some question marks, but there are definitely some spots that have been tricky this week. We came in right away. They bought high beta tech stocks, a lot of great breakouts. You had to be on your toes. Some made new highs and pushed and extended. Some looked like they were ready, and now all of a sudden we're 2 days later and some of them didn't go where we thought they would go, and some, are trying to figure out whether or not they're in a little bit of a profit taking, or is it a false breakout? Because every time the market pulls in, all everyone wants to talk about is false breakouts, crashes, and the risk of being long situations. So it makes it a little tricky. And what makes it a little bit more tricky is just the tight ranges that the overall indices are in. What do I mean by that? Let's just go right to the chart of the S&P cash. So you remember these big days when you had the post-Brexit, look at this, in 2 days, the S&P cash went from 2120 down to, 1980, and then you had a big move up, and then you had this nice little retracement that held with the red dog reversal, and then you had a breakout day, a little bit of follow-through. And since then, I think the stat is we haven't had a 1% move up or down since July, and now we're in September, 2 months and change later. So some think that's a prerequisite for some kind of huge move, which it might be. But if you've tried to buy into resistance for a breakout above the range, it hasn't worked. Same way if you shorted thinking we're going to break down here or break down there or break down here, or even today, this morning, after the first move down, if you thought we were going to break this mid-range, you got hurt just even hedging positions or adding to a hedge or trying to be net short. So I think there's a bit of frustration in this range that we've had. But within the range has been, we know there are things to do. But before we get to that for tomorrow, we have this 2175 as one level of support, and then really down here, 2160-ish is second level. And then if the bulls were to get us to, all-time highs, we're going to need to move above 2187 and then, 2193. So, this morning I talked about how, the XLE didn't, make new lows, not even new lows, it acted better when oil went from, the $50 range back down into the low 40s. It didn't pull back the same way it did the last time, so it kind of was getting itself ready for some type of weekly high or new high. And if you look here in the XLE, the XLE after the oil number wound up having, a really big move, okay? This channel that it's been in hasn't been the easiest one. Remember the red dog reversal right here, and we had a breakout here that wound up being somewhat of a fake one, and then you had another little red dog reversal higher than this one, showing you that it's, I guess, better to, buy a dip with a plan versus play a breakout. And then today, another breakout. So the question is this one going to, have some follow through or not? But all in all, the XLE, which on a longer term basis, that's been broken ever since it broke the 200-day here, has been a lot more constructive since April, really. It's been above the 200-day, and now it looks like it could provide some alpha. So the XLE was a better place to be with some of the stocks within that sector. I'm not going to get into that. Today, my day didn't start out well at all. I got in today. I was writing my note. I started writing it at 6 o'clock in the morning. I came in with like 7, 8 positions, all for a reason. First things first, I came in and I did buy Apple yesterday besides my call spread. I was like, oh, wow, they didn't hit Apple down. I had a little concern. I was thinking about it. I'm like, you know what? Every single person out there was talking about how, they usually sell the day of the event and rally the day after. This time they didn't sell it the day of the event. Maybe it was like a bait and switch, because they've been trying to make the consensus look as wrong as possible. So I came in long Apple. It was down like 75 cents off a little bit of a downgrade, 2 of them. So I said, okay, I'm going to give it to 107. 107 was the area that should have held if it was going to be constructive. So if you go to Apple, and let me show you why. I like to teach you a little bit also. Okay, first of all, here is that the low, okay, off of the EU $13 billion tax bill, okay, held there, so looked constructive. And then right here, 1, 2, 3. So the reason why I went home long Apple was because you had a pull in, held, didn't go down on the EU, gave you a little bit of a reversal, held the 21-day, but on my note, if you're a subscriber to my note, I said I come in long Apple. If it's any good, it should hold this 107 area, the 3-day range, to hold higher. So what happened is this, pow. You had a little bit of time. So within the first, I'd say 3 minutes, it broke below 107, went to like 106.70. I bought a little bit more. It tried to get above 107 and couldn't. And then when it broke that 15 or 5 minute low, I'm like, I'm done. So I sold all my apples somewhere around 106.80, and I saved myself, $1.50. And now look at the wide range bar, and there's probably a lot of volume here. And all in all, now this pattern does not look so good again. Pattern looks like still, a series of lower highs. It did reach my 108 to 112 resistance spot, which was a little bit close to here. And now all of a sudden you have another just almost lower high, lower high, lower high, lower high to that, and now lower high to this. So a bit vulnerable. I also, managed my call spreads. So my last call spreads wound up being a wash or a little bit of a loss compared to the ones that worked out during this little move when it was above the 8-day moving average, not below. So quickly, let's go to the 5-minute chart. I don't even know if you have 5 minutes, just to show you how quickly you had to think. You actually couldn't even do it on a 5-minute chart. You had to do it on almost a 1-minute chart. So you go to the 1-minute chart, okay, of, let's see. Is this the, oh, hold on, let's get it all the way to here. So basically, you look at the 1-minute chart, and you really had to know your levels here. It kind of, you had a gap down. So what did it do? It trapped all these people, trap, including me. Here was your 107, okay? It broke below it. So right here, I thought maybe they wanted to stop everyone out and then be okay. So on this little move, I bought more. Okay, well, why not? I actually sold a little bit pre-market when it was only down 50 cents to be safe. And then came back up, started to trade lower, and then when it broke this spot, I said, I'm out. So I didn't look at it once again the entire day. Big gap down, to the downside, showing you people were running for the exits. All these people trapped. Tried it a little bit in the first 5-10 minutes. Didn't work out. And then stopped out here, and I wound up saving myself about $1.30 and a lot of brain power. So that's how you handle when you step on a little bit of a landmine. Nothing you can really do about it. It did look like something worthy of a potential overnight. So if you took it, you didn't do the wrong thing. If you bought more today, then you're sitting in harm's way, hoping someone defends it or whatever. But this engulfing bar just kind of friggin', screwed up this whole chart here. So anyway, let's move on. Google also, a little wishy-washy, hard to really, it's not the end of the world. I got stopped out, and then I bought a little bit just because, if you really think about it, it's still above this spot. It's still above support. It's hanging in there. So not the greatest little chart, but, I would have thought it could have moved quicker, but it's still in the game. This is like your noisy spot. Here is support, trade 1. Here's trade 2. And now it's just not giving you another trade yet. Baba, I'm just in a call spread and letting the premiums get sucked in. It gave you a little bit of a trade earlier on where it was lower, then it went up $1, and then it came off towards the end of the day. But all in all, still looks good. Broke above this spot, and now this is your pivot for tomorrow, and then at some point perhaps this continues to the upside. Amazon still hangs around. So again, not the end of the world in these things. There's just not crazy momentum. There's moves from day to day here and there, but then you have to be careful on your entries when the momentum dies down. Here is a great entry in Amazon, another one right here when it broke above, and now it's had a 2-day pull-in. So we'll see what happens, with this pivot tomorrow, and then if it tries to break back above this or, continues back to the 8-day, which it's been holding. Netflix gave, back to its 1 day in, 1 day up, et cetera. I'm still in the calls. The reason why I had the calls is because it hasn't been really a momentum trade. It's been trending up since we talked about it at this gap, but hasn't been the momentum name that it usually is. So anyway, it still looks tight. It's still hanging around this 200-day. So I'm in the $100 calls for next week, and I'm thinking that if it's any good, it should hit 104, and it's still in the game. Still looks okay. Some banks look better today. Let's just get into them real quickly. Goldman Sachs broke above this range. I'm not in the banks, but there's one reason why the market didn't fall apart. Goldman Sachs on the move. JP Morgan looking like it's hanging around, holding the 8-day. You know, it didn't move, so I don't know what that means. Why did Goldman move and JP Morgan didn't? But this is kind of tight here, so maybe look tomorrow to see if there's any more follow through there. GDX, you know, inside day. You know, we had the oversold move from here. Remember that little, you know, red dog reversal there? Then it took out the prior high, gave you a 3-day move, and now, you know, kind of stuck in this range. I would be flattish. I don't know if you should be short or long. You know, it still needs to prove itself that it's more than an oversold bounce just to retest this broken trend line that it never got back up to. That was the intermediate trend line. In the new issue land, real quickly before I have to go, ACIA, you know, still okay. You know, gave you a little bit of a topping tail yesterday, so I told you wasn't ready for prime time momentum again. Now you had to move down to the 8-day. We'll see if this holds and you could buy it, kind of like what happened down here, and we'll see. Twilio, also building, looks good. You know, can't really complain about it. It had a lot of nice moves. Here was one of them, and then, you know, you had your engulfing move yesterday, but what did it do? It's holding the 8-day, so we'll see if it continues to do so to build to break above this. Still in the game. LN was stronger. It didn't close on highs, but, you know, it's looking better. So we'll see if this, I'm still in this one. If it continues to hold this at some point, over time, maybe it gets a little stronger and gives you a powerful move. Here is support 1, support 2, and then here would be a breakout move, which it hasn't done yet. It's taking its time, but building. And that's that. You know, I have to jump. I have my son's draft tonight. I know it's Thursday and it's game 1 of the new season. I hope you have fun watching it. The action the last 2 days has been a little tricky. There's been stuff to do. Hopefully you didn't overtrade. You know, today I overtraded a little bit and I had maybe a little bit too much exposure. Now I've pulled in a little bit. One of my tweets I said at the end of the day to Redler All Access was if you have 2 accounts, a swing account and an active account, you know, I've been long a lot of the same things in both, doubling up and, you know, trying to have more exposure. So now I'm, you know, long a few things that I like in my swing account, but I'm flat in my cash account just in case things start to swing around and get volatile, and, you know, I could have room in my active account to take advantage of the volatility if it comes back overnight. You did see, you know, a little bit of a move down in the DAX, still, you know, hanging in there, still above the 8-day, so, you know, not much not to dislike there. So all in all, trend is still your friend, even though everyone in their grandmother is saying that the market's going to sell off at some point, so every time it moves down you get a little worried. Here it's still, you know, in this spot and looking constructive. So until it really changes, try and stick with it. And if you're in something long, have a reason, short, have a reason. There's a lot of different reasons why to be in things based on chart patterns. See you tomorrow morning. I'll be in Short Hills. I'll tweet out what's cooking a little bit, and I'll see you on the VTF there. Bye-bye.